Our next guest has his hand in nearly every aspect of this market. Still seeing strong demand for premier office locations despite the broader shift to remote work. Joining us now with his outlook on this and much more is Brookfield CEO Bruce Flatt. It's good to see you, Bruce.
Morning, Sarah.
I don't know if people realize just how big and how broad your portfolio is. We think about commercial real estate and retail, but you also own infrastructure, renewables businesses, pipelines. It's huge. Insurance companies. Overall, what are you seeing right now on the economy?
Look, when you have almost $1 trillion of stuff around the world, you see a very broad array of things. And it's, look, I would say the economies are slowing, there's no doubt, around the world, but these businesses that we own are long-term cash flow generating businesses, and we look at them over decades into the future. And the fact is, recessions come and go, but these businesses keep growing. So we're seeing enormous investment into infrastructure, into transition globally, and that's driving many economies. It's going to be driving economies for decades going forward. So it's actually pretty good.
It's pretty good. It's interesting to hear you say that because, you know, in some of the headlines lately, commercial real estate, doom and gloom, Brookfield defaulting on some mortgage loans in office buildings like Washington, D.C. and San Francisco. What is the story there?
Yeah, look, the situation is commercial real estate is the largest, or real estate in general, to start there. Real estate in general, it's the largest business in the world. Everyone has an opinion. And therefore, generalities are really, really dangerous. So yes, there is some real estate that is defaulting, and some real estate interest rates went up a lot, or tertiary properties or properties that aren't well located, they're bad. And they'll have problems, and we had a few of them, which is a very small percentage of our portfolio. But our core business, which is great industrial, hotels, high-end retail, premium office, it's actually doing really well today. Cash flows are up. In fact, NOIs were up last year. So it's a tale of two cities. And one has to be very, very careful. So yes, there are issues in some commercial real estate, but it's the biggest one that has the issue is commodity traditional office. And
how exposed are you to that?
We have very little. And yes, we have some. When you have 7,000 properties around the world, you have some, but 95% of our assets and real estate is in the good real estate today, and 5% is in something else. And unfortunately, that's what catches the news.
I mean, even the new real estate, Manhattan West is one of your properties. Yeah. You're getting pretty high rates for that.
So Manhattan West is an example of it. The rents there are 40% higher than when we did the first building, which was just pre-COVID. So we've just leased 100% of the space up. So it's, again, a tale of two cities. If you're in New York and you're in commodity office space on 3rd Avenue in Midtown, it's not very good. And if you're in great space, we're leasing 665th, Lever House, Manhattan West, and these are attracting very premium rents. And it's the same across the world. In London, it's the same. In Dubai, it's the same. In Shanghai, it's the same. In Sydney, it's the same. Great space attracts really high price.
Would you open or develop a new office building in San Francisco right now?
San Francisco's tougher. There's a lot of excess space, and you wouldn't do it today. But eventually, yes, San Francisco is going to come back. It'll be a great city in the long term. We don't have a big exposure to San Francisco, but longer term, it'll come back.